What is a Form 1099-R and why is it so important? Hi, I'm Luke Kuchenberg, founding partner and senior wealth advisor at Forum Wealth Advisors, where we exist to help make life better for our clients and those in our community. And this is Plan For It, a monthly video series to help you plan for what's next. Let me start off by wishing you all a Happy New Year. However, no matter what your resolutions or goals are for the year ahead, getting this important tax planning point correct should be at the top of your list. To that, with the beginning of tax season now upon us, let me take a few minutes to explain what a Form 1099-R is, why it's important, and some common mistakes we have seen over the years to be sure to avoid. A 1099-R, or Form 1099-R, is used to report income distributions from retirement accounts like IRAs, 401ks, and pensions. For those that receive one, it can be one of the most important tax forms needed in the preparation for your annual income taxes. And now, with it arriving in mailboxes or email inboxes in the next few weeks, it is important upon receipt to review it and be sure it correctly reports the income you have received from your retirement accounts in the preceding tax year. To help in that endeavor, here are a few common mistakes we see with this form and how to detect it. The first common mistake we see is from those that are newly retired. They've never received a 1099-R before, thus they may not be looking for it. Because of this, it can occasionally be missed and therefore not included with your tax preparation. If this happens, you will end up with unreported income and have to file an amendment. Here I'm talking about qualified charitable distributions that were made from your IRA in the prior year. Many custodians will not break out the amount of your QCD from your overall gross income distribution. Thus, it is ultimately up to you to make sure that you have accounted for what amount went to charity so that you're not taxed on those distributed funds and your return is properly filed. Did you complete a rollover of funds from your old workplace retirement account to your IRA in the prior year? If so, a 1099-R will be used to report this rollover. Here it is important to confirm that your rollover was non-taxable and correctly recorded on that 1099-R with the distribution code G or H in box 7 of that form. If you note any other code, please be sure to consult with your tax professional before filing your income taxes. Have you been making non-deductible contributions to your traditional IRA? Perhaps you're using what is referred to as a backdoor Roth IRA strategy for conversions. If so, it is important to annually file a Form 8606 along with your tax return to report and track those non-deductible contributions. If you do not, you may end up paying income taxes upon withdrawal because you cannot prove you tracked and recorded those non-deductible contributions when they were made. So, how can you identify and avoid some common mistakes with Form 1099-R? Hopefully now you understand not only what a 1099-R is, but also why it's important to correctly report the income you received in the prior tax year. As it arrives in the upcoming weeks of early February, please be sure to give it a proper review in order to confirm all the information is correct before utilizing those reported numbers for your upcoming tax preparation. As always, if myself or any member of our team may be of any help in either starting or continuing this conversation, please be sure to let us know. Until next time, here's to the pursuit of living a better life.